All right. Good afternoon, everybody. You got to see how some of the sausage was made there. And we were aware that we were there. Please,
Yeah,
please turn up my volume. You got my volume there, Scott?
yeah, I'll turn up. Sorry, my bad.
Okay. So this is our 13F segment that we do. And basically what we're trying to do here is sift through some of the recent filings. I know they came out about 2 weeks ago. And we went through a number of them. You could look back in the archives under the audio ticker or audio X. Should hold all the archives for our prior recordings. But what we like to do in this is it's dated information for sure, but it does kind of help you understand in terms of the strength behind either breakout potential or a drop off just from a big buyer or a big holder that might be gone from a name there. So it is helpful when you're looking at some of these trends and you're trying to figure out what kind of support is underneath. So we've been doing this for the last year and a half or so, and have certainly been able to uncover some big winners. Sometimes there's nothing there, but in general, usually we each find one or two names that we really like. So it's a helpful exercise, especially for anybody that's looking to search through and find some new ideas to invest in. So without further ado, last time we had left off with Janet, with Glenview
Yeah.
Capital, Larry Robbins and Mark Horowitz's hedge fund. And the first one we're going to be hitting here is Jana Partners, which is run by Barry Rosenstein. So take a look at some, and we usually just limit it to new positions and closed positions rather than getting into some of the maintenance of increased positions and things of that nature. So who knows, maybe in a year or two we'll be able to take a look at some short positions as well, Scott. But for now, we've got plenty of information to keep an eye out on, and let's take a look at some of those Jana new positions that they did, with one being an interesting name, Treehouse Foods, which basically distributes in private label packaged foods and beverages here in the United States, and they got an international presence as well. Some of the items that they will do include mayonnaise, barbecue sauce, pastas, pickles, cookies. So really a wide gambit of items. They are located out of Oak Brook, Scott. I don't know if you were aware of that.
Nope.
But taking a quick look, so when we are discussing this would have all been actions taken by Jana through the end of December 31st. So it's always helpful taking kind of a look there and see what the stock did. And you can see what we're talking about in terms of looking to get into the 200-day moving average there and then rejecting and slipping down. So you wonder, if you're looking at this, are they still involved? And that's one of the question marks that I'd have right off the bat. However, this has seen a nice recovery, which to me suggests that they did stick around, and that there was another seller there that we found that supported 38. And then got back up to the 200-day moving average in late January. And then back in February, we saw it break out and really rip higher. This would have been following earnings here, and just the idea that an activist investor like Jana did get in, and they were actually given a board on this. It was noted that they had a board on the seat at Conagra. So when the 13F started coming out that Jana was getting involved, they're viewed as an activist, which means they usually are jumping in to push a stock to do something. You can see that breakout that we got in reaction to the news, ripping above the 200-day moving average, getting up to that 49 area. Now it's pushing up to that Psych 50. It's been able to hold above that 48 area, that gap up that we always like to see, Scott. So THS is definitely providing some interesting opportunities here. What's your thoughts on THS?
I agree with you. I think that maybe they even added to their position after the earnings move and helped it, break out to the upside. That's usually what they do. They start positions, and then when they get a good earnings report, they're going to definitely get it moving in a certain direction in the after hours and then for the next day as well. So it looks great. I mean, if you had shown me prior to earnings, like right here, I would have been like, what the hell is this company doing involved in in this stock? I mean, it's in a massive downtrend for the last 2 years. There's nothing really going on. And then boom, you could see it just breaking that downtrend line. Really strong move to the upside. Uh, yeah, definitely worth doing your homework in, and I'd say I like it above $45 going forward.
Yeah, I would note that there's been a few analysts that have come out and cut the company because of that move. Just giving you the heads up on that, Bank of America was out. Credit Suisse looks like they downgraded them. Stifel as well. So the analysts think that, the good news is priced in. However, you do have to take a look at this momentum. And we've known that analysts and their valuations have not necessarily been a perfect match last few years. So
Right.
we'll keep an eye out on that one. Next up, we've got TGNA was the name that they added. This is a stock that's seen a really nice rally through breaking above the 50-day moving average at the start of the year and just really pressing higher. This is a television station and radio station company. They basically delivered television programming and digital content. So something along the lines of an MGNI or a TTD. Now, you've seen that it ran up to that 19 area, and taking a quick look before getting rejected, before it got into that 20 psych area, Scott, which I know is an area that you like to take a close look at.
Mm-hmm.
When you're looking at this company, it's 218 million share float, so a pretty big float there. Only trades at a forward PE of 10.3 times. So it certainly hasn't been picked up like a TTD or MGNI. I don't know what percentage of their volume is through digital content. It looks like that they are much more of an older school shop from what I'm seeing, but that the valuation certainly looks interesting for this TGNA.
Yeah, and there's no arguing with the strength of the chart there. A really strong move back to the 52-week highs for this one. Like you said, just kind of stalling out a little bit around $19. I'd keep on the radar. Let's take a look at the weekly time frame. Sometimes you get a better feel for this. So weekly time frame has a resistance area for a couple years now coming into play in the upper teens, just shy of $20. It's worth a look. Definitely look at the top and bottom growth in this stock too. You're talking about really accelerating growth the last 2 to 3 quarters in this name. So it's definitely fitting the bill. You have strong technical growth, strong fundamental growth with a strong chart. So pretty good activity. I like it. I'll have to look a little bit deeper into it.
Yeah, no. And this is exactly what this is a name that neither one of us would have looked at, and this exercise definitely helps us kind of unearth some of these plays. So TGNA is definitely going to be going on, and what we're going to be doing here too is I'm going to be highlighting any of the names that we were very bullish on for potential plays here when we post the comment, which will help. Next up, Jana was definitely doing some value searching. They had Laboratory Corporation, ticker symbol LH. This is another one that's pretty fairly valued with a PE of about 15 times earnings right here, but another nice little steady chart. The other thing too, a lot of these Jana names breaking up above the 50 moving average right around the turn of the year. So LH seeing a little bit of resistance at the 250 area. And again, just as a recapper, it's an independent clinical laboratory company that operates on a worldwide basis. So providing different test results like urine tests, pap tests, things along those lines. So looking pretty good here. I don't know if they're involved in the vaccine dissemination at all, Scott, but obviously another cheap name that's got a good looking chart, and that's kind of what you're looking for, right?
It looks like at the end of December, Gav, that they had some sort of FDA approval for a COVID home testing kit.
Okay. There you
So
go.
that's actually one of the reasons why it probably broke out there to start the new year. Accelerated top and bottom line, fundamental standpoint, strong technicals. There's no arguing with this name. They jumped on board a winner here, so kudos to them. From our perspective, just watch the simple technical analysis. pullbacks to the 20-day have been bought up. As long as it maintains that strength above the 215, 220 area, I'd say it looks good for the long term. The 50-day moving average is also on the rise too, so you can even watch that if you get a little bit more aggressive of a pullback. But yeah, pretty solid mover here. Yeah.
All right. Next up, we got GRA, which is WR Grace. It's a chemical play that they added in, another pretty fairly valued name, trading at 13.45 times forward PE, so pretty good there. Now, this company did receive an unsolicited proposal from 40 North. I don't know 40 North. I guess it was for about 65 a share. So this would have been around mid-January. That's where you're getting that spike up to the 65 area. But again, Grace did reject this. They did say that they were going to review the offer, but again, so this is going to be a hot name in the M&A space for sure. And yet another one that's holding in pretty nicely. However, you know, with the 65 a share and it rejecting it, you wonder if it's got a little bit of a capped valuation here, Scott.
Yeah, and that's also long-term resistance too on the chart here. This weekly time frame, you can see from 2018, 2019, 60 was a resistance level. You can even just go a little higher, and you get to see that there's some resistance right at that 65 area. You have the weekly 200-day moving average come into play there. You know, they probably got involved somewhere in the last quarter or so. So they managed to capture at least 10% to the upside there. You got to wonder if they're going to be hanging around for the breakout over 65 or not. So, yeah, it's not the prettiest looking chart out there, but it's worth a look. Eating that lunch, Gav? Lost you.
No, just idiocy on the mute button. And I am working at my lunch while we're doing
same here.
So Callaway Golf, ELY, they exited this position, and you can see came back down to the 50-day moving average. This is so many charts that we've seen that look like this. Now, a lot of them are bouncing this morning. I took two longs in names that I thought would get back over, with Square being one. Home Depot was the 200-day, but you know, I think that we could still see that go over. Eli bouncing right off of it, coming up to the 20-day moving average, now running into a little bit of resistance. So this is a name that, you know, I'd have a little bit of concern on when you see a Jana that's leaving this. You know, you saw a downgrade at Cowen right around when these 13Fs were released because of the valuation. And, you know, for me, what are you looking at on upside here? Until it got really back above 32, I don't think I'd feel comfortable with it. So I'm not chasing Eli myself, Scott. You got any thoughts on ELY?
I mean, the chart looks great. I mean, I showed the weekly time frame here. So it started breaking out the end of last year to the upside. Sorry about those alerts that keep going off. But yeah, broke out to the upside. They were over $24, which was the 2018 highs. Got a little bit too far ahead of itself, or over 32, pulled back to the 50 like you said, but still looks fantastic. I think if you like it as a long-term play, it's okay above $24. I mean, would you consider this almost a reopening play, Gav? Like to people to go out and buy golf clubs and start playing again?
No, because that's all people did during COVID.
Yeah, exactly.
Golf courses were a big COVID winner. So if anything, I would think that they would be losing out because advertising dollars would be going elsewhere and spending. You know, I mean, people weren't able to do anything but go on a golf course.
Yeah.
Now, you know, this summer they might be able to go to a movie or go to a restaurant and everything. So I think golf is going to be not a loser from it. I think that they've got a lot of extra people on it and everything. And there's still going to be people that are going to be cautious and not go jumping back in with 2 feet. So, but I would. They are going to have some really tough comps. Let's put it that way.
Yeah. All right. Just watch that 24 area. Looks like a solid name, though.
All right. And then the other one that they exited here, I really don't know how to think of their business. Brinkers Company, BCO. You know, the day of like seeing the cash truck coming, Scott, and you know, the bank robberies with the cash truck, it's probably going to be changed over to people in their computer robbing the banks or whatever. down the road. But interesting name here. It's up near the top. I don't know if they're involved with any digital. I don't know the space that well, but I can't imagine that this is something that's on the rise. Although I guess diamonds and jewelry still need that security protection, and I don't know. It'd be interesting. However, this name has been great with that sideways move in the break above 72 here just over the last week. So I do like that aspect of it.
Yeah, it has. It's been showing some decent recovery efforts here. This is a weekly time frame. Again, I tend to use more of a weekly chart when I think about institutional money managers as opposed to daily time frames, at least to get a bigger picture, look at everything. Had a really strong performance end of the year, consolidated, breaking out again to the upside. You know me, Gav, I don't really tend to look for reasons of why things are moving. I just kind of look to see if they all line up with the broader market and the trends and the cycles. And this one's doing okay. So it's worth a look. I wouldn't say it's the sexiest stock in the world, but it's worth a look.
Yeah. Yeah, not the sexiest, but again, like you said, it is an interesting looking push. I would have not expected that.
I would have never looked at it. Yeah, it would have never been on my radar. Yeah.
All right, we're going to move on now to Elliott Management, run by Paul Singer, of course. He had a couple of new positions that he added, and one of them is EVRG. So just taking a quick look. They just recently had earnings, I believe, back on the 26th. Let me just double check that, Scott. I think they got earnings coming up here. Sorry, the computer's running a little slow. We do not have them on our.
They reported page. They did report on the 26th. It's on our page. It's under, if you go EVRG.
Okay, what was it? That's weird. It wasn't pulling up for me.
It's just you go to the archives and you can see it. It's a utility company.
Yeah, I got that.
They beat by 3 cents.
All right, so nice 3-cent beat here. They'd obviously be a big winner on any of the infrastructure rebuild that we'd want to be on the lookout for. Let's see what region they operate out of. EVRG coming out from Kansas and Missouri. So definitely that's an area that was blanketed with the cold weather, a little bit more used to it than Dallas, of course, and the Texas area. So I didn't hear anything too bad out from the Kansas, Missouri areas. Again, they deal with cold weather. Nice 3.99% dividend here, Scott, on this play, which definitely helps buffet it against any sort of any sort of rate rises in the T-bills because it's so much further above. So looking at this, I'd be okay with owning this, Scott, because it seems like you got your base in here around 52 to 55. You just got to understand that if you're buying this name, you're buying it as a dividend play, and therefore it's a little bit more of a fixed income name.
Yeah, I agree wholeheartedly. If you're looking for that dividend yield, almost 4%. I mean, that's a solid looking base right there. I'd say it looks great above 50, but I wouldn't really expect much capital gains to be had there to the upside in the group there. It is a little out of favor as of late. So, yeah, looks good though for a dividend play.
All right, next up we've got EFT, which is Eaton Vance floating rate income. So looks like they were certainly looking for the income plays. This is a dividend yield of 5.45%. So, that's two interesting moves by Singer. Now, granted, they usually are more on the fixed income side. I'm sure you've heard of the legendary battles with Argentina and Paul Singer. So this is an interesting one, getting in on the trucking space. Or getting in on the fixed income space there and just looking to collect that dividend yield of 5.45%. So two nice dividend yield plays. Any thoughts on them, Scott?
No, but I love ETFs that pay more than 5%. They're always worthwhile, just kind of sacking away in your longer term income portfolios. So this is the one to do a little bit of research on.
Yeah. Another one here, EFR, which is the Eaton Vance senior floating rate trust. So again, they were going all in on Eaton Vance and their dividend yields. This one at 5.8%. So a little bit more of a safe haven play by Singer Management, but they're getting some nice fixed income plays payments out of that.
Nice, nice. I apologize for the alerts showing up on the charts if anybody's looking at that. It seems like Zoom, ZM reported earnings today, and I just have a whole bunch of alerts that it's moving to the upside here. So here's just a quick look there. So
okay, we'll keep an eye out on that. Here's a REIT again going on in the fixed income area, Public Storage PSA. This one running a divvy of 3.42%, Scott. That's some heavy breathing going on into the mic.
Sorry.
So it got rejected at that 245 area, came popping down here. I don't know, more than likely there's probably that pop in rates that were leading to some of the REITs getting hit here as they become a little less attractive. But this is riding a 20-day moving average, coming into some firm support at 232. And again, a dividend yield of 3.42%.
Was that my cue, guys?
Yeah. This is PSA.
Yeah, sorry, just kind of. Anyway, no, it's all right. It's a REIT, public storage. Yeah, it's one of the stronger ones that's out there. It's all right. Yeah, I don't really have much to say about it. Throw in the REIT in that major REIT category.
Yeah, and then finally, the last one that we'll discuss here is FFIV 5F Networks Telecom Equipment play. Here, offering network applications, servers, storage systems. Steady name. It doesn't really see a lot of fluctuations, but been a nice steady mover with the 5G space, obviously finding some interest. However, did roll over at that 210 area and is, again, one of those names that we're looking at trying to recover the 50-day moving average. So until you see that with a little bit of conviction, I would have I'm a little skeptical of it.
Yeah, it doesn't look bad though on a weekly time frame. It has struggled for the last 2 years, and then it started to take off in Q4 of last year. Definitely a little short-term overbought, getting back up to new highs, pulling back a little bit. So you should be a little cautious about it. But overall, I think it looks okay. There's a gap support level that's in play that I drew here around 180. So I think if you like the name, it looks okay above 180.
All right, and then they closed positions, and I was surprised to see this because this is a name for me that's been on a roll. eBay, EBAY, yet another one coming down into its 50-day moving average after getting rejected at that 64 level, holding up pretty well as most of the names are today. But again, this is what we were talking a lot about for the earnings coming up this week, Scott, and we're seeing it again in a lot of these 13Fs, that same common pattern that we're seeing in the chart. So why don't you talk about eBay, and why don't you just mention a little bit of what, from a technician, you think about this current move today? Are you sold on it, or are you still a little cautious?
No, well, it depends on your time frame. Let's just put it that way. So, trading wise, I mean, it was just an absolutely beautiful setup, selling off the last couple of days into end of February, bouncing off the 50-day moving average and the Feb low. I mean, that's your classic support level coming into play right around $56 that you could have just kind of leaned to the long side either Friday or added to a position here this morning for a quick little bounce. A bigger picture, you do have that issue of almost a false breakout from above the $60 area. So that does raise a little bit of a concern, for whether it's going to be able to resume to the upside again. That does kind of take the wind out of the sails. So I'm just, like I said, short-term bouncing, it looks great. From a bigger picture perspective, investing, it looks like it's probably going to do some further chop activity. I would really need it to get back above 60 and hold on to those gains to really give me some confidence that it's going to be moving back to the upside. So, but overall, It's a great company. I mean, it has been doing really well, the top and bottom line growth the last couple of quarters. So it's doing something right.
Yeah, which again makes me wonder why they're selling. Welltower, WELL. This is another interesting name. This is basically a REIT. What they do, Scott, is they buy facilities and then restructure them for senior housing operations, to be able to handle all the medical devices and things of that nature, which I would have thought that, maybe during COVID there would be a lot of overhaul of some of these names. So, I would think that this would maybe be a hot space, but obviously Elliott didn't see it that way with them selling it. This is recently ran up to the 74 area, but has pulled back to 68, still above its 50-day moving average, but seen a little bit of an intraday bounce. And if you're curious, they paid a 3.59% dividend here.
Yeah, a little bit more of a broken chart there, Gav. I mean, they're selling right around 70, which is a gap resistance from COVID over a year ago. So it looks like that's a key line in the sand on a long-term chart. I think they probably made their money in this name, from some lower level. Maybe it was COVID obviously attacking senior housing and whatnot. People probably scared from it, so they probably picked it up on the cheap. And then here they are with some solid gains, and they're just getting rid of it. Sell the news sort of reaction to vaccines and whatnot,
Yeah, no, it's very likely. So, okay, let's break in Berkshire here, Scott. Warren Buffett, of course. Berkshire had their earnings out over the weekend with Mr. Buffett's newsletter making the way. So, taking a look at the new positions that they added, we talked a little bit about it, so we won't spend too much time, but added Verizon, Chevron, and Marsh McLennan to MMC. Of those names, did anything jump out to you?
Oh, let me look at them. Hold on. Being the chartist, I need to look at my charts, Gav.
Yeah, that's why I was asking if anything was jumping out to you. I know I'm still in Verizon for those asking. That 54, 55 area continues to be a strong weighting. You could see the stock reaction in Verizon when this news came out. It popped up to that 57 and rolled back over to 55. I still think that this is a good entry for you if you failed to get in following the Buffett headlines. You're getting a chance to do it again with this little small rollover.
Yeah, I'm in Verizon too for the long haul. I've been buying it up over the last decade or so. That's okay. That one, I mean, it's at the lower end of its multi-year range there. Chevron, I think, Gav, is this the one that you like, or was it Conoco?
Yeah, I mean, Chevron.
Yeah, I mean, you've been talking about this one for a couple months now, back above the 200-day moving average. I know you liked it. So that's a solid move there. I do like that one. Energy has been the best performer so far year to date across the board. It's been an underweighted group for the last 2 years, in my opinion. And now it seems like money's diving back into it the last couple months. There's some real good valuation, great names there. Trends are higher. Chevron looks like the better of all of them. MMC, Marsh McLennan, just not doing anything. Just a very sideways range. It is hanging out underneath multi-month range around 120. So you're looking for more of a breakout there, but it's an insurance stock, so it's not really like, I don't expect the momentum to kick in aggressively at any point in time, but it seems like a solid play if you like it. But I think Chevron would be the best standout, the one that I like the best.
All right, and then they were getting rid of their gold miner, GOLD, Barrick Gold, which this is just an ugly looking chart. Scott kind of falls in line with the GLD chart too, I suppose. It just continues to slide lower. Where would you be a buyer of gold on the chart?
The stock or the GLD?
The GLD.
Oh, let's see. That's a good question, Gav.
I mean, 160 does have some support here, right? If we're going off of that May through June area.
Yeah, I mean that's the key support level in play. I mean you got to assume that it's probably going to break underneath it, and then you have to get some sort of reversal. I'm not really a huge fan of watching things break down and start like trying to find bottoms in them. But you do have RSI here getting into oversold territory about below 30. So that's going to be on the radar of anybody who's trying to buy a dip here. So I would say anywhere around this 160 vicinity is worth a look. For me personally, though, it's below all the key moving averages, so I would probably be a little bit more hesitant, and I'd have to focus more on a weekly time frame and see if you get a weekly reversal out of it somewhere off this 160, 155 area. Yeah, there's a lot of moving dynamics with the rates rising and the U.S. dollars rising now, so it's just kind of tough. But I'd keep it 160-ish on the radar. But I'm not in any rush to be a buyer. I'm more of a trend follower, Gav. You know that.
Yeah, I got you. Some other closed positions here. Pfizer. This would be a classic sell the rip type reaction that would have come after the COVID vaccine news started really getting heated up there. We saw Pfizer pop up to 43, and it would appear that that quick chop back down was because Mr. Buffett and Berkshire had parted ways with it, as well as a number of other people. Now it is coming back down to some interesting support around 33, but chart still looks a little ugly to me here, Sat.
Yeah, I mean, look at this weekly chart. It's really whipsawish over the last 2 years or so. Even pre-COVID, it was looking pretty nasty. So it has its you know issues technically. I do own this one long term. I've owned it for well over a decade now. Always paid a great dividend, but it's just look at this on a monthly chart. It's just really sloppy. I don't really. But most people just seem to be buying it for the dividend. Watch the 33 level short term. 33 seems like a key support level from the last couple of months, but I don't know. It's too sloppy for me to really kind of have any conviction behind it outside of a dividend payment.
No reward for saving the earth, huh?
Apparently not. You know,
I,
there was a guy
I
named
mean,
Jesus. He didn't get rewarded either for saving the earth.
I mean,
Recently
maybe
killed him.
give up doing vaccines and go sell some cheap clothes like TJ Maxx or something. That's obviously what the investors want, man. That's cold.
Yeah.
So anyway, we got and then a couple of banks that loaded MTB, PNC, and JP Morgan were all there. I mean, I still love JP Morgan, but it is pretty expensive up at these levels. I was talking about this morning. It was a great write-up in on Citigroup, which I still own, in Barron's that I should check out, talking a lot about the potential upside there. But somebody like Buffett shopping JP Morgan, that would have me a little cautious that not saying that the top's in, but going to have a tough time attracting money given these valuations. What's your thoughts on JP Morgan?
I mean, doesn't he have like warrants from like 2008 or something like that? I don't
He
know.
had warrants at Goldman. I don't know if he had them for
Yeah.
JP Morgan. I think he turned them all in.
Yeah.
If I recall, they were for around $65.
Yeah, he's waiting for the next shoe to drop so he can buy more warrants and
I'm sure.
bail out the bank somehow. Who knows? I don't know what to say. I mean, the financials are really strong. We got rates rising a little bit again, so everyone's excited about them. And there's no denying the strength and uptrends that they're in right now. So, might as well get out when the going's good, right?
Yeah, no, that definitely makes sense. So, okay, next up, we are going to move over, Scott, to David Tepper and Appaloosa here. Hold on a sec. All right. So one of the hotter names that we've seen the last couple of weeks has been Occidental Petroleum, ticker symbol OXY, and Appaloosa was definitely at the forefront of that here, buying it last quarter. So a nice little rip and rally in OXY as it comes up to this 27.28, but still looks like it's got a little bit of upside to it given the reactions that we're seeing.
Yeah, this was a name back in Q4 underneath $10 was an absolute steal of a stock. I mean, they had their recent merger go through, and they pay a dividend, and it's just a fantastic turnaround play here for a company that I think really just took it on the chin there for about a year or so. It looks great. Nice recovery effort. I think you just have to watch for pullbacks to key support levels around above $20. Looks pretty solid.
All right. Next up, we got EPD, another energy play. This one, it's a midstream energy service to producers and consumers of nat gas liquids, crude oil, petrochemicals, and refined products here. So more of a pipeline play, obviously. Again, another one that's been doing well with the recent rise in oil prices. This one's just riding its 50-day moving average up. Cracking above 22, which you want to see. 23.50 is going to be the big area for of a test for me here, Scott.
Yeah, I mean, this is one of those MLPs, so it's got a really solid dividend. I think it's, I'm showing over 8% here, so it looks great. You know, and it's in that same space. Energy's been rallying for natural gas, crude oil. Everything's climbing up the right side of their charts, and this one is a solid dividend payer, so looks pretty good there. I like it.
And if you like these plays, then you're probably buying the XLE, and they certainly were.
Yeah, no doubt. Looks great.
Then we got EQT, another one that falls into this place. MPLX is also going to pop up here. The XOP as well. So pretty energy heavy there for Mr. Tepper over at Appaloosa. Now, a couple other plays that's of interest. Macy's and Kohl's, Scott, were two buys that they were looking at. We've talked a lot about these names. Of the two, I prefer Kohl's myself, but Macy's definitely was enjoying a pretty nice run there. Going on, got caught up in that squeeze action with the Reddit traders to get it to 22, but really what we're looking at is that 17 area as a key level of resistance to look at. And the Kohl's has just really been on a steady run the entire time. So do you have a preference between Macy's and Kohl's on the chart?
On the charts, I would go with Kohl's as well. Just still holding on to those gains. Looks pretty solid coming up into the fresh 52-week highs, just shy of $60 and whatnot. So I prefer that name. Macy's, I kind of lump closer towards that J.C. Penney, which really hasn't done well, I don't think, these days. So.
They've all been doing a little bit better, right?
Yeah, but just J.C. Penney and Macy's. I mean, I don't see the difference between the two stores, personally. Not that I, ever really was shopping there a lot, but Kohl's, I do think it's more of the better of the two, technically. But it's just interesting to note that, if you go back about 45 days on these 13Fs, just really nice, strong technical reversals that David Tepper got involved with here from the energy plays, getting back above their 200-day moving averages in November and December, seeing your classic textbook golden crosses, the 50 days getting back above the 200-day moving averages in the XLE and these names.
Uh-oh.
As well as
am I hearing blue chip talk golden crosses? You hate golden crosses.
But it looks like Mr. Tepper likes them. So, but yeah, I see a clean one. They're just very, very clean on these stocks that he's involved in. So maybe that's his secret to his madness there. His secret sauce. Yeah, he likes golden crosses.
Well, if we see the Carolina Panthers change their name to the Golden Crosses, we know we're on.
Does he own them? I didn't know that.
He does. Yeah.
Okay.
CarMax is another name that they were adding on. KMX. No Golden Cross here, Scott. This one was just pretty strong throughout the quarter, riding along on its. Well, I guess think back above the 50 and the 200s and the 200 in November. So perhaps that was part of his game plan. Now it's been going on a sideways trading range, which you're okay with seeing that, Scott, right? As long as it holds above 117.
Mm-hmm. Yeah. Yeah.
What that valuation is here.
Yeah. Again, I give things a little bit more wiggle room when it comes to these investment managers because I think they're willing to risk usually up to about 15 to 20%.
Right.
And then their technicals, they're really kind of, I think, focusing more on weekly trends and monthly trends. So I think above 110, is a solid area to kind of just keep track of on these things. So really solid breakout over 100 to start the year. It just looks great. I think that's all-time new highs too.
All right.
And you know who got involved in this one too, Gav? Back in 2008, 2009 was actually Buffett.
Oh yeah.
Yeah, it was one of his top picks back in 2009 in the recovery effort.
He doesn't still own it though, right?
I can't answer that, but I know he picked some of it up back then. And I thought it was a brilliant play too at the time because I was like, oh yeah, he's onto something there for sure.
All right. So what did Mr. Tepper dump? AT&T. Good move there. This one is breaking below its 2850 level.
If he bought it, you'd be railing on him. You'd be like, "That's a horrible move. You hate this
I
company."
totally would. I really do. I with such a passion. I mean, I feel bad, like just railing them. But you know what? I don't actually. I don't. If I've cost them $300 that they've cost me, even then some, I'm more
So you
than
wouldn't
happy.
even buy AT&T for that 7% yield?
No.
Yeah.
No, I got Verizon.
Oh yeah, it's
I
true.
got
That's
Verizon,
true.
and I mean T-Mobile's got the better 5G network anyway. You know what I might be going to, Scott, is this Google Fiber line. I might use that as my next service, but I love Verizon. So, I mean, Verizon's the one service that I've had over Verizon and DirecTV until AT&T bought them were my two favorite services that I've probably ever owned in my life.
Okay.
What would you say is your
I've been a Verizon guy for years.
and would you say that you put them at the top then?
Considering I never have to call them, yeah.
Yeah, right.
It's if I don't have to call your customer service, yeah. And then when I need to use them for any reason, like getting new phones or whatever, and they make the process very painless, yeah, you get high kudos from me for sure.
Yeah, yeah.
Yeah.
So AT&T, a very precarious position here, Scott. Obviously, some of the selling that we saw take place was a bad time for AT&T because that was trying to get back above that 250-day moving average there, rejected at those levels, and now we got it slumping down here. Where would you feel comfortable buying AT&T? Would it be at these levels for starting a small position given that dividend yield?
Uh, Yeah, I mean, if I really was looking for a dividend yield in my portfolio, I mean, yeah, I would start a small position here, and then I'd probably look to see if there was any sort of breakdown below 25. You go back about 10 years, you got support around 24. That would be the next place I would add. So I would just start a position here, maybe add a 24, and then you hope it doesn't get to 20. Because if it gets to 20, you probably have to double down, triple down.
There's a lot of debt there too if they get to 20.
Yeah,
Um,
yeah. So, all right, we got to move along, Gav. Otherwise, we're going to turn this into a three-part series.
yeah, and we're keeping an eye out on GME as this is on the move. Not seeing
Oh,
any
jeez. Yeah.
particular headline. Let's take a look at some of the other ones, Scott. KOSS, moving higher here. AMC.
Come on, charts a little
And
loaded.
not much of a move in AMC, but definitely looks like the Reddit names are getting a little bit of a goose here. So
How is EXPR doing?
EXPR, that is trying to get towards the session highs here. Not as aggressive as GameStop itself.
Mm-hmm.
So
Well, obviously, that seems to be the hot one out of all of them that started the whole thing, right?
yeah, Roaring Kitty must be letting himself be heard.
Don't ever say that again, please. Not in my presence.
Yeah. Well, it's happening, Scott.
Yeah.
Closed out Altria MO as well.
Okay.
Another high dividend pair. This one, just taking a quick look at MO.
Okay, can't match.
It's having a decent run here up until it got bounced up at that 46 area. So not sure I'd be chasing it myself into that level.
Sorry, Gav. What stock is that? I lost all my intraday charts for some reason.
Altria MO.
MO. Yeah, this is a pretty solid move. The resistance level, $45. I'm pretty sure they pay a really high dividend still, right?
Yeah, I'll take a look, but it's got to be around 6, I'm sure.
It's 7, almost 8.
They're definitely not getting any ESG money.
Yeah.
7.8. So they have to have that big.
Again, I think if you are looking for a dividend stock, then this is definitely worth a closer look. Interesting monthly time frame here. You look over the last 4-year downtrend broken or just starting to get broken on MO. Very interesting.
All right, and also sold Boston Scientific, BSX, which definitely has an interesting look to it, considering that they would have been selling. That would have helped explain why it went down to 33.50. However, so this is a great example of why we like going through this. This to me, Scott, looks like a new class of buyers that might be willing to stick around. So how do I read that? This 36, 37 area where we got the 50 and 200-day moving average, for me, it's got a higher likelihood of holding under this scenario because of that. Does that make sense?
No, I like that. You alleviated supply. Yeah, exactly. So when you alleviate supply and prices go higher above resistance, that's a whole new level of buyers are coming in. You don't have that lead blanket, weighing in on the price action. So worthwhile. Definitely worthwhile. I'd like to see it break out over 40.
All right. We are going to move on to Starboard value here then. This is Jeffrey Smith's holdings. Didn't have a lot of action, wasn't buying a lot of stuff. On Semi is the one position that they added, ticker symbol ON. It's trying to break out to all-time highs here. Obviously that's the key, right? It's got to get above 41 and press higher, and it's looking pretty good. Any rejection there, Scott, and you got to hope that it's holding 38. Otherwise, you could be in a little trouble. But one to watch if the markets really start getting strong, in my opinion.
Yeah, I'd like to think, looking back at this monthly time frame, that they're probably getting involved on the initial push to a new all-time high back in November and December over that $27, $30 area, and just kind of accumulating it and riding it to the upside there for that breakout. Definitely have some. Assuming they've been in since $30, I mean they're over 40% right now. So I'd be a little curious about how much more upside there is. They're probably going to be unloading it or at least mitigating it soon. I wouldn't be surprised after a strong move like that.
Yeah. Okay. Breaking into Corvex Management here. They were getting involved with AEO, which is, of course, American Eagle, specialty retailer here, riding its 20-day moving average up. So nice little move by Corvex Management. They got to be feeling pretty good about themselves after getting about a 70% return or so at the moment on AEO.
Yeah, phenomenal call. I don't know why the stock has been going higher as opposed to like other retailers, which, the retail in general has been doing pretty well, but this stock is just doing fantastic. I don't know who their spokesmodel is or what, but clearly doing something right with a really strong trend. So the trend's your friend until it ends. That's the way it works. It looks okay above the 50-day moving average.
Do they have a spokesman? I never see American Eagle.
They didn't call me up and ask to fashion anything.
You're just their foot model, right?
Pinky toe, Gav.
The sexiest pinky toe on
planet.
We got Alphabet up that they were also adding. Luckily, they got involved with that one before that big quarter from Alphabet. I still think one of the best FANG plays out there. I've been long it forever. They just really don't do anything. They have the occasional quarterly miss, because they don't provide guidance and they don't really adhere to that quarterly idea that you got to beat every time. And it's just well run. Everybody's got to use it. Everybody Googles everything, and once you're in that lexicon, I want to own it. But it has shown some signs of breaking, maybe back down below the 2,000. Now, it did recently hold it. What do you think of this little island pattern that we're seeing up here above 2,000, Scott?
Yeah, I mean, you do have that gap up there, so it's it's there. It's lost some of that momentum afterwards, and this can be a fickle stock for sure. But it's one of those names that when it does correct, everyone's buying it up when it turns off the lows. So, like you said, it should be a staple in your portfolio. Hopefully by now, after all these years. That's it. I don't really have much else to say about Google. Short-term trading, it's got to be above 2,000. If it does come back in, of course, you're watching the 50-day moving average around 1,900.
Okay, and this is why this is a fun exercise, Scott. They bought Radius Global Infrastructure, ticker symbol RADI. RADI. Now, what do they do, you ask? This is why I like this play. It engages in the ownership and leasing of various triple net ground, rooftop, and other critical communication properties for wireless carriers and tower companies, underlining their mission-critical cell antenna infrastructure. So it looks like to me, now I'd have to do a bit more digging in, that what they do is they kind of find different areas to rent out additional cell towers, like some of the mini cell towers, I'm guessing. I would have to do a little bit of a deeper look, but this reminds me a lot of the Cambrian, that CMBM play that I got into. We know that this is the area for latency that they have to build out, so it should be a hot area. Recent IPO, I guess it's. So one thing I am seeing is that they are believed to be eventually going for REIT status. Management, pretty strong management here too. It's a name that I like the looks of, Scott. I'm going to have to dig into this one.
You definitely have a tendency to love these tower plays from AMT and CCI and SBAC. And if you're telling me RADI, you're telling me Google's getting involved with them? Is that what you were saying?
No, not Google. This is Corvex Management.
Oh, I'm sorry. I'm sorry. Yeah, that's right. I definitely worth a closer look then. I like it. It looks good above 12. Right now. A little concerned that it broke below the 50-day moving average, but if this thing can get back above it and start headed back towards 14s, that's going to be a pretty strong mover there. So, yeah, definitely want to do a little bit more homework in.
All right. Let's see, the Coca-Cola Canon as well, CCEP, or Coca-Cola European Partners, I should say. Good looking chart here. This will be the second Canyon play we've seen, right, Scott?
Yeah, I'm typing the wrong symbol in Gap. What was it again?
CCEP.
Okay, thank you.
So they're by that good looking name here.
Yeah, is this more of the bottling company, or is this just more of the European based?
I believe it's more the bottling company here.
Yeah, I think it is. Right.
Yeah, because there's 3 units, right? There's Coca-Cola, then there's the Coca-Cola bottling, and then there is this European unit. Just taking a quick look.
Yeah, I always think that the bottling company might be the better investment than Coke itself. Just because they go out, they branch out into different, beverages and whatnot.
Let me take a quick look. Produces, distributes, and sells a range of non-alcoholic, ready-to-drink beverages.
Oh, okay. Maybe not.
Company also flavors, mixers, and energy drinks. So
yeah, so it looks like more just a European Coca-Cola version.
Yeah, they got Sprite, Schweppes.
You know what? It looks better than Coke itself. If I think a Coca-Cola is really.
It does. That's why I thought it was the canning.
Yeah, I know. That's why I said too. But yeah, Coca-Cola has been struggling itself underneath the 50-day moving average and underperforming. This one looks like the better play, and dividend yields over 3%. So yeah, it's just I would say look into this one.
Yeah,
I haven't been to Europe yet. Do they drink?
They do.
A lot. Or...
The American champagne. You've never seen a European vacation there, Scott?
It's been a couple of years. Is that what they called it?
When Clark Griswold's ordering, and he orders a Coke, and the guy's like, "Oh, American champagne."
I don't remember that. That's great.
That always cracks me up, that part. But yeah, I'm amazed at the divergence between this and Coca-Cola. I don't know, maybe because
this is what happens.
Yeah, I guess so.
Somebody's smart enough out there to know the difference, so we'll jump on board that train.
Yeah, maybe it's like the Mexican Coca-Cola, and like they got like different tastes to it and stuff.
Mm-hmm.
I don't know, but all right, well, we'll circle back. That's an interesting dichotomy between those two. That's for sure.
Mm-hmm.
Let's see. Then I think we got some Liberty plays here. LSXMK, which is the Sirius satellite group from Liberty. I don't know how many tickers. This has got to be the most confusing company.
It really is.
Follow this whole Liberty media. But I will say this LSXMK looks pretty good. And again, it looks better than Sirius. So
I don't even remember the ticker. What's the ticker for Sirius again? Is it SIRI?
SIRI.
Yeah. All right. That's fine. We can
Yeah,
move on from that.
yeah. All right, and then moving on from that, we got FISV, name that you were just asking about before, Scott. You should ask Corvex Management about it because they were buying it last quarter, so obviously they're doing their due diligence. Any thoughts here on FISV again?
It looks great. Watch for that breakout over 120 so we can get to new highs over 125. Looks pretty good.
All right. Also buying STPK. Scalp Trader will be happy to hear that one.
SPAC.
That's, of course, one of the SPACs that Scalp's been trading a lot of as of late. So Corvex was involved with that. You know what? This is probably the first SPAC play I've seen in this 13F.
That's true. That's true.
That we've done, right? I haven't noticed any others. Workday, another name that they were getting involved with last quarter.
Yeah, not a bad move there. Pulling back from the last couple of weeks down to 50-day moving average, holding so far. It's worthwhile looking at that one. Workday, WDAY. It's been a leader for quite some time.
And a name I got on my radar here, Global Payments, GPN, a little bit of a sideways direction. I like the way that this is looking. I was looking between this and Square. I went with Square this morning just because I felt it was the better brand name for a bounce day. So GPN, I like the looks of this, Scott.
I think GPN is great. I was running through the holdings of the iBuy ETF. That includes PayPal, Square, and GPN. So I think the whole sector looks really hot here. Gav, I'll be right back in like 30 seconds.
Sorry. Okay. No worries. We'll just continue on here with Corvex. Comcast, unloading Comcast here, CMCSA. This stock had been making a pretty nice move throughout that November Q4 timeframe. So my assumption is that they sold it right around this 50 level. So it's been going on a sideways direction, which is encouraging given the idea that there's a large holder that could be out from there. Another name that they were selling, and this one I'm pretty interested in, Twitter, TWTR, obviously a little bit early on that sale. Again, tough to figure out exactly where they might have been selling it. I would be guessing in those low 50s is when they would have gotten out. But this is a stock that has made just a big move, and we'd have to see if there's going to be some more people selling it as well. But it certainly doesn't look like anybody's looking to get out. And as long as it holds above that 72 level, I can't imagine too many people would want to go to the exit. So Twitter still looks great here. And just kind of sitting above 74, but they definitely got to be kicking themselves for that sale.
Yeah. Oh, sorry, Gav.
Oh, okay, didn't know you're back. So yeah, that was Twitter, Scott.
Yeah. One
of the areas that they sold. And so next up, we're going to move on to Viking here, and let's see. What do you think, Scott? Get through.
We're going to go to a part 3, it looks like.
Yeah, we'll go to a part 3. We'll go through Viking, and that'll be the last one today, and then we can just pop in and take a look at some of the upcoming earnings.
Sounds good.
Here. So sorry it takes us so long to go through these guys, but
there's a lot.
Yeah, there's a lot, and hopefully we're uncovering some good information for you. One of the names that they were buying here, GE, Scott. Just looks beautiful. I've got a nice little return going on it, and really, I think that this is set to go test 20 at some point now. Given
really 20? Okay, cool.
I mean, given the recent price action, if we're looking at valuations here, I guess it is up to 25 times forward PE. So getting a little bit higher up on the value. Wouldn't be surprised if they're getting closer to returning to a dividend. They probably have another year in purgatory before they do that. But, just a beautiful price action. And, again, it was kind of consolidating around that 11-12 area. Now we got it moving up higher to that next level.
Did they clean house with their management? I forgot the story behind it, why it was
they
there and whatnot.
Yeah, and that was one of the main reasons. The guy who took over was the former Danaher CEO, Larry Cope, and he did a phenomenal job at turning around Danaher, and he's obviously doing the same at GE. They probably need to post a couple of good reports maybe to get to 20, but I'm not in any hurry to close this out just yet. And that forward PE, it's rich right now, but they continue to improve their free cash flow. So, I do think that there is some evening out and reckoning on that forward PE level.
Yeah, looks good. It's got some resistance here, though, on a long-term monthly basis, right around the $13 area. So it could slow down here a little bit. That's the long-term chart. Obviously, stellar gains the last couple months here. I would just be a little cautious here, but overall, it looks pretty solid as a recovery road, above $10, $11.
All right, next up, ABCL. It's an interesting looking name, Scott. It's an AI gene discovery platform, or antibody discovery platform, obviously. With the COVID virus going on, that's going to certainly be an area that remains in focus. Now, it hasn't really worked all that well since its IPO. I love charts that look like this, Scott. I know you've kind of won me over on your argument on these charts. Coming back into that 38 area, if this keeps holding, this is a name that you got to have on your radar, I think.
Yeah, recent IPOs, really poor debut, but it is forming somewhat of a double bottom off that 38 area, like you said, $38, $36 area. So if it is somewhat of a low risk, potentially high reward play, as long as it continues to hold this newly formed double bottom support. So yeah, it's worth a look if you like it.
Yeah. Disney, they were buying that as well. That's getting up close to that 200 area here. I remain long that play. FDMT is another name that they're getting involved in. Let me just do a quick search. 4D Molecular Therapeutics. So it's funny. They were going to either blue chip or
IPO,
or IPO, right? So another clinical stage gene therapy. I mean, I guess the thinking is that one of these has to hit, right? I mean, they definitely had a concentration in there. So FDML, any thoughts on that?
Just sideways action. I mean, overall, the IPO debut price came in around $40, so it is still holding above that, which is a good thing for IPOs. As long as it stays above 40, that's the line in the sand. So I'd say, look at it, take a look at it. It's got to stay above 40.
All right. They were also buying some EQH, Diversified Financial Company, that has a dividend yield of 2.3%. Should have been talking to Singer about some of those 6% Eaton Vance plays, right? If they're looking for financial with the dividend yield, but this put up a pretty nice looking move here in Q4, Scott.
Yeah, really solid. But again, financials have been doing pretty well. This is more of an insurance-based company, right? So you got a nice solid breakout there. Here's the KIE, which is a nice insurance play as well. This is more of an ETF that I track for the group overall. Dividends, less than 2%, but it's a good indication of, just tracking the performance there. I mean, we mentioned Marshall McClellan earlier. So that was another name that Buffett was trying to get involved in there. So there's maybe somewhat of a theme here about diving back into insurance names. Travelers, TRV, obviously a Dow component. This one's been doing phenomenal as well. Slow, steady grinder. So, yeah.
All right. We also got MetLife, MET,
insurance,
which looks great near its highs here. PANW on the cybersecurity front, they were a buyer of them, coming in to test its 50-day moving average right around this 360 area in PANW. Have you gotten involved with any of the cyber plays the last couple of days?
The last couple of days, I have not. Have you?
Well, I'm still bouncing around in the Zscaler, which I like.
Right.
Continues to hold the 200-day moving average. So, okay. Next up, we got HCA Healthcare, another senior living facility. This one just sideways trading range right around that 170 to 180 area, Scott.
Yeah, it broke out Q4 of last year over 150, and it's just been kind of grinding its way higher here, taking a little bit of a rest all along these highs above the 50-day moving average, but it still looks fantastic. This is, would you throw this in with the, is this more of a facility stock or is this more of like a provider like United Health and CI?
Um,
Can't remember.
let's see. It's more of a service company. They do
Oh,
more labs,
okay.
radiology,
Oh,
respiratory
okay.
therapy,
Okay.
things of that nature. So it's inpatient care, intensive care.
Okay.
So yeah, different from
I think a Humana maybe. All right. Mixing
yeah.
it up. Okay, cool.
All
But
right.
yeah, it looks great.
Another one adding Marsh McLennan here. So that seems to be a popular name.
Yeah.
Also one of your favorites, Scott, Billy.
I just like saying it, Gav.
Yep. Well,
No,
looks
but
like
I
people like
also,
buying it these days.
yeah, this one got away from me. I really wish I had somehow participated in it. Um, yeah, I had that strong breakout in November, and with the other Chinese stocks to the upside there, and then just that's all she wrote. Strong moves to the upside, almost tripled in price. Recently pulled back to a rising 50-day moving average amidst high volatility, bounced off of it. Very sloppy, volatile action up here, so it's a little bit out of my favor, to actually be involved in it. But I do like the overall performance level, and if dust settles down a little bit and it consolidates, definitely be on my radar.
All right, and then they were also buying Facebook, which is getting into a pretty interesting area here, Scott. It's just kind of getting pinched between the 50 and the 200 at this point, and looks like it's getting coiled and ready to move.
Yeah, I agree 100%. Something's going to move eventually in this stock. What's the catalyst? I don't know, but definitely keep that range on the radar, and just go with the flow. That's it. So we'll see.
There you go from Scott. Something's going to happen in the stock.
It's
That's
gonna
the
go.
cutting edge. That's the cutting edge insight we give you here.
It's going to go up or down sometime in the future.
Yeah, but we both agree that this one's getting coiled and ready to make some major moves. It would seem
Yeah,
like.
it's a good chance that I'll be trading it on the site too when it does make that move. So,
Yeah.
yeah.
Yeah. So, okay. And then the closed positions, another one dropping Comcast. They also dropped Raytheon RTX, Scott, which is a name I know that's been looking a little bit better as of late. Maybe my guess is they got over the 200 and they cut and run, perhaps, but who knows exactly where they sold. But this has basically been going in a sideways direction, more or less, although it is making some signs of pushing higher here. You like this name, right?
I actually do, yeah, and I've been owning it. I've owned it before when it was United, and before it did that merger and the spinoffs, etc. So it looks pretty good. A little bit of a short-term, false breakout in play there over 75, but the whole group did that. Boeing kind of did it, and other stocks did it in the same area. But it looks pretty good overall on a bigger picture time frame. So I'm digging it. I like the industrials. I like the aerospace group. So I'll give it the benefit of the doubt that it's going to eventually try to move higher.
All right. Another name that they cut here was Exact Science, which is a name that I've definitely been curious about. They do a lot of screening and testing, which obviously with the COVID tracking is going to remain a big thing. This one's just kind of been really chopping sideways in a pretty wide area, Scott. Right now, fighting to get it back above its 50-day moving average here.
That's true. It's got some resistance around that 140 area. It was a fantastic trending stock the last 3 or 4 months above the rising 50-day moving average, rising 20-day moving average. Every pullback was bought up. You can see from all these various trend lines that I had drawn there. But now things are kind of broken a little bit. That trade has kind of stepped to the wayside, and stock's got something to prove here below 140. So, yeah.
Okay. I'm just keeping an eye on the backdrop here. I'm seeing some headlines that the Senate's prepared to take up debate on the stimulus bill this week. So we'll continue to see that move along. The general thought is that we'll get about a 1.5 trillion package that should be ready to go by the end of the month. All right. So here we got EXAS. Next up, Analog Devices, ADI, trying to get above that 162 area with limited success.
Yeah, we'll see. But semis are hot, so it's just a matter of staying with the relative strength, the relative performance. It's above key support around the 50-day moving average. Stick with it until something changes otherwise.
All right. They also dumped their Nikola shares.
Yeah, well, they should.
Them and everybody else, right?
Yeah.
And then the last name we'll take a look at here is Atlassian, ticker symbol TEAM, of course. Cloud Play. This one's making a nice move today. It's bounced firmly above that 50-day moving average, moving up back towards highs.
Yeah, this is one that's I find to be a difficult stock to trade because it does seem to be very volatile. But bigger picture, I think this is one you can just kind of nibble on and just kind of sack away. It's been on our radar for years now as a growth name. Years ago, I think it was on the emerging growth focus list. I know it's made its appearance on the liquid momentum focus list at various times. I've had a guess it was probably somewhere in 2018 and 2019. But yeah, just a slow, solid mover. This is like the competitor to, was it Cisco that I'm thinking? Or is that
No, you're thinking ANET.
Oh, that's right. So what
You're
remind me
thinking-
what Alison does? What do they do, Gav?
Cloud computing play. Exact. I mean, most of these guys are covered by big data sharing in between organizations, workflow management systems that enables teams to plan, organize, track, and manage their work and projects. So yeah, so just underlining data and reporting software that allows people to share different projects across management, things of that nature.
Yeah, nice accelerating uptrend over on a long-term chart. So, just really solid move. It just looks to buy dips. But again, like I said, it doesn't seem to be, it's very sloppy technically. You can see here it doesn't really hold the 50, so the 20-day moving averages kind of does its own little thing. But those dips do get bought up on pullbacks and they seem to rally. So it's a very nice channeling uptrending stock for many, many years now. So.
Yeah. All right, so that's going to do it for this round. We'll
Cool.
leave it there. We got a couple more that we could hit probably tomorrow, Scott. We're getting closer to the close here. Just keeping an eye out on looks like Scalp Trader giving a swing update, using weakness to take his position of full size in this NSTB. For me, I'm going to be posting this to the site. I don't think I'm going to carry the Home Depot overnight, but I will carry the Square. So, and the SOTS I'm willing to hold overnight as well. I'll probably just bank a little bit off of that just to lock in something on that side of things.
All right,
But
cool.
you want to kill that, and we'll jump back on and do a few of these earnings.
Yeah, I'm going to kill the recording, and then we'll do a part 3. We still have, I think there's only like 5 more managers we can go through, starting with Stanley Druckenmiller at Duquesne Capital. So, yeah, let me kill that, and we're starting up a new one probably sometime in the next few days, right?